Hello everyone, this is Matthew Frailey with BreakpointTrades.com. Founded it back in 2003 to provide you advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading systems, which is one of my passions, with our 90% winning trades for our SPY and ES mean reversion systems, and of course my invention from a couple years ago, our KISS universal systems, which I'm finally launching the next version next week. But let's go ahead and get to this newsletter. I'm actually going out of town tomorrow to New York, so I got a lot of things to do. It is Wednesday, June 12th, and this is our back-end recorder for our website service subscription, which if you're on YouTube, please consider subscribing. Helps us out, but you'll get so much additional comment over the YouTube videos, such as 5 weekly newsletters, dozens of actionable trade ideas, email trade notifications to our mechanical trading systems, KISS systems, a community, you name it. So let me get this puppy started. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, June 12th newsletter. First off, before I get into the things, admin comments, I'm leaving tomorrow late morning for New York. I'll be back late Tuesday. Combination of family and maybe a little business. I'm going to meet up maybe with a couple Breakpoint Trades members, subscribers. That's always fun. And of course, I have family there. My wife and kids are already there. Sister-in-law is there. I got a cousin there. You name it. All right. So I'll be back late next Tuesday. Okay. And because of that, the KISS systems, we'll be launching those once I get back into town next week. All right. As far as the newsletter, again, divide into 5 major sections, same theme as I always keep. So nothing new there. And as far as the market, again, we were expecting a big move in the markets today because, as we've been stating all week long, for Wednesday, we had the CPI and FOMC. So you got a double whammy there. So basically, everything was coiled spring set up, and market futures, ES and NQ futures reacted strongly higher after that weaker CPI data came in. All right. Now the market didn't have much reaction at all to the FOMC and to Powell's statement, likely because it had already exhausted itself on the CPI. Okay. Also, the Fed's expecting one more rate cut for the year. Again, as far as the market, guys, ad nauseum, there's really nothing new to say. We remain in this uptrend. We remain in some sort of 5-wave uptrend structure, maybe to end later in the summer. The nice thing about the KISS systems is they will keep you invested long with the trend for as long as it lasts. So you don't have to sit there and try to guess tops and get scared out. Just follow the KISS systems, man. And let's get started with things. So let's talk about the KISS systems here briefly. Again, I will be doing a big update next week video. We'll be launching a new service. So here's the section with the KISS systems. So most of the website has been using these for the last 1.5 years. They've been live. We have the daily. We added the weekly a couple months ago. So the things that are coming will be the high performance, also SMS text messaging. Now, SMS text messaging, I don't think it makes sense to send text messages for all the standard universal dailies, because there's a lot of you guys that have dozens and dozens of favorites set up, and I think you could be overwhelmed with text messages. So for the SMS, it makes sense more for the high performance that are intraday. But one thing you can look at on the website, remember, we have the last trade stats on just the standard. You could see, so here's the BPT basket. So today you could see Microsoft and the triple Qs, NASDAQ ETF had new smart trailing stops today. And you can see the triple Qs from that recent entry again is up 8.4%. And you can see the system before that made 22%. So again, you can see some nice gains here. Like I said, NVIDIA there, the current trade's up 40%. Previous trade made 63%. Again, there's a couple of losers here and there, but that's the beauty of the KISS system. It keeps those losers fairly small and allows the winners to run. Now let's take a look at some examples of what this high performance section will look like. So here's an image from the high performance section. You can see the tab. So those of you who are using the KISS systems, right now all you see is daily, weekly FAQ. So once I make this live, you'll see a high performance tab and the SMS. The SMS, you'll be able to go in there and input your phone number and enter a code, and then the website can send you text messages. We're not charging specifically for the text for the SMS. That'll be coming with subscription. But so here's an example of some of the high performance stuff. So you could see the symbol, and there's some of these I have some duplicates. So for example, minutes here, you can see 130 minutes, 39 minutes. There's a variety of things here. Microsoft, there's two high performance systems, a 65 minute and 130 minute. You know, again, you could follow both of them, or just you can look at both of the statistics for each one and decide which one you want to follow. It doesn't really matter. I typically follow both of them. You know, why not? And SSO, you can see there's a 30 minute and a 78 minute system. So you can see they're all intraday. And the anyway, so here you have the trades stats. So whenever you click on the trades stats, and again, some of this formatting is going to change, guys. We're not exactly finished with a couple of these things. It's going to be fluid and adapting. But whenever you click on the trades here, you're going to go. It'll show you a full trade history for each of the systems and detailed statistics. So let's take a look at some of those. So for example, here's the SSO 30-minute high performance KISS system. So you can see every single trade is going to be listed. All right, this is just a static image here, so you can see 272 trades. But every single trade is listed from the entry date, entry price, exit date, exit price, etc., how long it was in there, and percent gain loss for those trades. Okay, and that's the trades. And if you click on the stats, you actually see detailed statistics for that particular system. So here's the SSO 30-minute. You can see the stats tab is selected. Again, some of this stuff there's some bugs in here, so don't overly concern yourself with a few of the numbers. But these are some of the things you'll see, like profit factor, total gross profit, winning percentage, time in trades. By the way, instead of bars in trades, I'm going to have James convert this to days. Okay, so you can see a table down here. So for example, the years, the percent gains. By the way, at this moment, so it shows SSO's up 17.94% for this year. It's been in an open trade, and that's not included here. So it's actually up more than what the market is with the current open trade. Okay, that doesn't change this until it closes. But you have your system here, number of trades per year compared to buy and hold. And again, as I've showed you before, KISS system's just blow away buy and hold. Another example, here's another KISS high performance system, yen. That's the leveraged Chinese ETF. It's a 78-minute system. You can see the trades, the trade history, and image number 7. Here's the trade statistics for yen. Actually, a very good system. Really like this one. You can see, in fact, it's currently in a trade, and you can see it's up 47.5% this year versus buy and hold 23%. Last year it made 81.5% versus buy and hold you'd have lost 57%. So quite the difference. Oh, and 2022 up 128.5%, off 14 trades. Last year buy and hold would have lost you 71%. So no comparison to buy and hold. So those are some examples of KISS system. Again, there's some things here, like I said, they're going to change. Max drawdown. I think James has this as dollar amount. This needs to be percentage. Just, little things to finish, but that'll be ready for next week. All right, guys, looking forward to it. I know you guys are looking forward to it. It seems like it's been decades. Joking, but you know what I mean. But finally, it will be coming. All right, let's go and move on to the general market newsletter. So item number 8 shows the index sector table, what transpired today in this week. So again, big moves in the indexes, especially in the morning. before the cash market opened on the futures after that weak CPI data. And then pretty much after the morning run, it was a sideways move most of the day, even after the FOMC. S&P up 0.85%, up 1.4% for the week. NASDAQ up 1.5% today as a big move. Same for the Russell. NASDAQ's up 2.8% for the week. Now the index really lagging is the Dow. You can see it actually down today and down for the week. As far as the 21 market sectors, despite today's big rally, not all the sectors were up. There was 3, 4, 5, 6, 7 sectors that were slightly down. Okay, big moves obviously in the tech area, some weakness in energy, and the financials here continue to lag this week. Okay, drugs, healthcare, utilities, which are defensive sectors, they were down today. Not surprising. U.S. dollar had a big sell-off today. Not surprising, down 0.5%. And crypto was up, still down for the week. Commodities, mostly to the upside here. The index is up 0.3%. Crude oil up 0.8%. Natural gas pulling back. Copper up. Uranium up nicely. Agriculture, wheat, coffee down. Now, with that falling dollar, gold had a big rally, 1.2%. Silver up 3.5%. But the miners, the stocks are really lagging here, guys, only up 0.8%. I still think gold had that fifth wave high, so I'm still betting on that. And I'll talk about that when I get below. But clearly a nice move today. As far as the bond market, nice pullback in the 10-year, 30-year Treasury yields. And, of course, the yield curve, I haven't talked about that for the while, still buried. You know, maybe this will finally go positive later in the year. Who knows? But it's been inverted for about 600 days now. Image number 9 shows you the economic news calendar. Again, we had the FOMC, CPI today. Tomorrow we have initial jobless claims and PPI, core PPI. That's producer inflation. So we'll see the market's reaction to that. And let's jump to the charts. First chart below, item number 10, is the daily snapshot of the 5 key major indexes. So again, you can remember a week and a half ago, Bollinger Bands were pinching there. That resulted in another nice thrust to the upside. We closed outside the upper Bollinger Bands on the NASDAQ and S&P, so be aware of that. Usually price doesn't stay out of those bands too long. Short term, we're obviously quite extended here, you know. And the Dow here, really lagging here. Look at that. It's only to its middle Bollinger Bands. Next, image number 11. Here's the weekly KISS system. So I'm showing the weekly here on a Wednesday because we actually have new smart trailing stops on the S&P. Actually jumped, looks like 300 points from 49.09 to 50. Actually not 300 points. So just over 100 points from 4,909 to 5,024. And triple Q's, nice move up in the smart trailing stop there. Apologize, I had to pause the video. I was interrupted. So again, new smart trailing stops on the triple Q's and NASDAQ for the weekly KISS. Next, image number 12. Here's the daily KISS for the S&P. No new smart trailing stop here. I'm surprised, but wouldn't be surprised maybe if it jumps up tomorrow. Remember, I'll be leaving tomorrow late morning, so James will update these near the close. Again, just a great example here. Education I've been talking about. This moving average ribbon. You know, I like to keep things simple when I can, and these are just such a good visual guide. Remember I talked about when the moving average ribbon goes positive and that first squeeze into the moving averages, the BPTMA. It's usually a good buy signal, and that ended up playing out just perfectly. Image number 13, here's the 4 time frames. Again, the daily up here, like we already discussed. And here's the half day. By the way, notice here you had, and this is the fractal nature. So on the daily, remember we had that squeeze into the moving averages, which were right off that ATR. On the half day, that was here, but notice the BPTMA came in to the ribbon, and then it had that pinch, and then we resulted in that pop up today. Again, otherwise, short term, again, we got it quite extended. You know, the market kind of blew its wad this morning on that number. And you can even see here on the 78-minute. So besides when the moving average ribbons pinch and all this, The other thing is when they get too wide, kind of like it is here, that needs to be worked off. Next. Image number 14, here's the daily triple S&P. This just shows you that simple 5 wave count that I was showing a few weeks back, and that's been playing out obviously. We're in some sort of 5 perhaps, where you could break this down. Again, the trend is up. No changes here, guys, like I said. Next. Chart number 15, here's another example. Steve's been showing this. I've been showing it as well. So again, nothing really changed here. This also shows a wave 5, but this is a nested 1 2 1 2, and this would allow for maybe a high here to be a wave 3 of 5, and then a pullback would be a wave 4, and then you go up again in a 5. That's kind of more what we're favoring. If we get a pullback in here, it would be some sort of 4 and then a 5 up again. Again, my thought is market's going to likely move up into July sometime. Then maybe we'll see a correction of some magnitude. Image number 16, here's the half-day chart. Just shows you the same count there. Potentially wave 5 of 3 here. Once this ends, either here or later, maybe get a wave 4 pullback. Then another move up in a 5. Chart number 17, 60-minute view. Again, remember, great example how we rallied off that demand zone in late May. Just perfect. Supply and demand zones are just brilliant. The first test of the supply zone we did pull back from, formed a higher low, then we busted through it. Then we had this consolidation here, for the last several days. Remember, out of contraction comes expansion, and that's what happened today. Again, got quite extended here in the short term. Here's the 30-minute chart. You can see the consolidation and the pop out of that. Next. Chart number 19, here's the triple Qs. Again, just like on the S&P, some sort of wave 5 here, epitome of strength. RSI 14 is now getting overbought, just something to note. MACD, and this is the thing about divergence. Notice you had a MACD divergence here, and the MACD divergence is now gone on the MACD. Chart number 20, here's the other version of the Qs that Steve had added. Again, it shows you that same thing, that kind of nested 1 2 1 2. Wave 3 of 5, just like on the S&P. Chart number 21, here's the daily KISS. So we actually got a new smart trailing stop here. It jumped up to 455.75. Apologize right here where it went long. It's kind of hard to see that. There's a smart trailing stop there. It's covered over. But it's a great example of the KISS system, guys, how it's been riding these trends. Here it got out, and then it got right back in a couple days later. KISS system will do that. If it senses, hey, it wasn't right to get out, it'll go right back in. Chart number 22. Now here's the Qs from the KISS tables, just the standard universal KISS system. The one I just showed you, is kind of a slightly modified version, back tested a little bit, so it's got a little higher stats. This is the universal non-back-tested version, and it never got out here. This version also doesn't stop out intraday at the smart trailing stop. It needs a close below it. And you can see we had that move below it in the previous week, but then we did closed back above, so that's why it never got out. So new smart trailing stop there as well, up around 456. Image number 23, here's the 4 time frames. Again, very similar look to the S&P, quite honestly. So moving on. Chart number 24, here's the 30-minute chart. Remember, we had this consolidation pattern. Out of contraction comes expansion, which we clearly got. Right in the morning, that was the time to take some profits. And then we simply consolidated most of the day after that. Chart number 25, here's the 60-minute chart. MACD divergence there, blown out, so no more divergence there. Just a little overbought there in the short term. Chart number 26, here's IWM, Russell 2000. Nice move out of that demand zone. Great example of that being a nice area to take along. Now today this was up, pulled well off those highs, a black candle. This is your main resistance here. Otherwise, this little 5-wave trend here, we still favor an eventual move up out of this into this 5. And chart number 27, here's the 60-minute or the 2-hour chart. Remember, we pulled back, we filled that open gap previous week, and we got near the 61.8 fib where we bounced. Again, you can see today it was up, and then it had a big sell-off late in the day. So that does it for the major indexes, guys. Let's go ahead and move on. Chart 28, here's the VIX. Big old drop in the VIX, as you know. Big old move down. You can see how the VIX stalled at that supply zone a week and a half ago, where the market rallied. Chart 29, here's the S&P versus high yield corporate. Again, the two move together, so you always want to keep an eye on. You look for divergences. Really no divergence here. Okay. Moving on to the bond market, chart 30, here's TLT 20-year bonds. Again, broke out of the channel, remember a couple weeks ago, pulled back tested the channel, which is typical in technical analysis where it found support. Rallied up today, little pulled off the highs, black candle. Chart 31, here's the 10-year treasury yield, nice pullback, still in this little downtrend channel. Let's take a look at some of the bigger pictures of the 10-year. So here's a weekly view of the 10-year. You can see this coil forming. Now, it's interesting because if this, I'm wondering what it's going to do with this coil trend line. If it were to break this coil, I could see a pretty good pullback here in rates. And if you want a reason for the S&P maybe to go up to 6,000 or something like that, that would be a reason for that. Okay. Again, don't get me wrong. Long term, the 10-year treasury yield is in a secular bull market now. But remember, you're not just going to go up all the time. So this is an important support. Let me take a look and show you an example of what I see could happen. So chart 33, here's a zoomed out view of the 10-year. So again, you can see it bottomed in 2020 on that COVID. Big rally up, took out this long-term resistance here, the 3.2% area. Remember the 10-year here, you divide it by 10 to get the interest rate. So 32 is 3.2%. So this area broke out, it became support. So I could almost see something like this where it pulls back pretty good. That would give more fuel to the market, but ultimately it'll form a higher low. But that would provide quite a bit of fuel for the market, into the summer if that were to occur. Chart 34, here's the 40-year chart going back to 1980. Again, like I said, interest rates were in a secular bear market for 40 years. Broke out of this 35-year downtrend line in 2022. So secular bear market is over for interest rates. So the new normal is up. But again, that doesn't mean you can't pull back like maybe to this area. Remember, this area is now big support. But that would provide some fuel for the market to rally if it wanted to do so. Next, moving on to the market sectors, just cover a few of them. Here's XLK Technology, just continues to roar higher. Again, it's two frickin' stocks essentially. Make up 44% of it. Chart 36, transports. Remember, it's shown this channel. We did gap out of the channel today. Tagged that 50-day moving average, pulled back off of that, but we're out of the channel. Chart 37, XLI Industrials, still in this same old consolidation pattern, so something to watch here. Moving average ribbons are getting tight, so energy is building for a pop sometime. Chart 38, Home Builders also continues to be in this coil pattern. Energy is building. Chart 39, XLE Energy, quite weak. It opened okay, but boom, down. Again, remember, it bounced. It filled this open gap last week, bounced, but, it's still in the downtrend channel. So no changes in the trend here. Chart 40, Oil Services, a little stronger. They did bounce off the demand zone, right? Today pulled back a little bit, holding up better than XLE. Chart 41, here's yen. Remember, we also have this in the high performance section. That high performance yen blows it out of the water. Remember, it pulled right off that supply zone that I had marked well ahead of time, and we're now into this demand zone. Moving average ribbons pinching. So I'm watching for this area for a potential nice low risk buy. We'll see. I could also just wait for the high performance system to go along, obviously. It's actually currently flat. Next. Moving on to commodities, chart 42, DBC, the index, up 1.65% for the week. Again, overall though, remember it's still in this multi-year coil pattern. Eventually it'll break from the coil. Chart 43, here's the daily DBC. Again, came right into the demand zone. Last week, rallied right off of it. Again, these demand zones and supply zones are awesome sauce. Chart 44, crude oil. Remember, rallied off the demand zone, right? Again, great example here. Demand zone became support. Supply zone became resistance. Demand zone became support. You can see we're testing this channel. Chart 45, there's the tradable ETF. Same look, obviously. Chart 46, natural gas, UNG, pulling off this area. It's been struggling around the 200-day moving average, not surprised. Last time, that's where it stalled. By the way, this was a demand zone where it bounced off of. So it's stalling here a little bit, not surprising. Chart 47, copper, bouncing up a little bit as well. Still closing slightly below the 50-day moving average. Moving average ribbon's finally starting to pinch. It was very wide up here. It was due for a pullback, which in price to reset that, which we've gotten. Chart 48, DBA, agriculture. Again, beautiful rally off this demand zone. I was kind of hoping when it was down here, it was going to come to the next demand zone down here. That would have been one hell of a buy, but instead it held that demand zone. Rallied up, consolidated. You kind of see a little three wave here, finding support at the 50-day moving average. Nice rally up. Looks pretty good. KISS system, high performance is long DBA, by the way. Chart 49, Bitcoin, just kind of consolidating here. This is the daily, kind of a horizontal rectangle pattern forming. Chart 50, here's the weekly. Okay, haven't shown this for a while, but this is something that we made, last year. So we're still, ultimately, we think this is some sort of wave 3 here, wave 4 consolidation. We're still favoring a new all-time high as a wave 5 here. That'll set up some divergence on the RSI and MACD if that occurs. Chart 51, Ethereum, a little weaker here than Bitcoin lately. Nice little pullback. Still above its 50-day moving average. Some of the crypto stocks, here's Irene. This was given by one of our subscribers, MLA127, back in May, which I added it to our watch list. So good job by both of us. Good job by him. And a good job by me taking his idea and adding it. I thought his idea was extremely good. And that's the whole point of the website and trading, guys, is sharing. We can't see everything all ourselves. And so, you get ideas and things from folks you share. So anyway, beautiful rally off that coil. Just absolutely impressive. Then another coil here. This is a crypto type mining stock. And you can see it just continues to absolute roaring. Look at the volume here. No MACD divergence. Just insane strength. Chart 53, Wolf, was also been a powerful one. A little crypto stock. Chart 54, MSTR. This is a beauty. We had it as a long idea back here in February in the 500 range. It rallied, basically went up fourfold, or went up to $2,000. Forming an inverse head and shoulder pattern here where we added it back to our watch list. Had a nice move up again. And right now it's consolidating. And the final one, chart 55, Mara. This used to be a heck of a mover. It hasn't been as much lately. Some of the others have been much better. Anyway, you can see the pattern developing. Moving on, chart 56, US dollar down. This is the weekly chart, down for the week, 0.25%. Again, it's still in this old coil pattern. So nice pullback today, but it's still in the weekly coil. Moving on to gold, chart 57, here's gold. So gold, nice rally today, right? Up 1.2%. But again, my issue with gold here is that you can clearly count a potential fifth wave high up here, all right? Or, I guess if this ended up being a wave 5 of 3, maybe this rallies up. But it's still, otherwise, I added a couple trend lines here to monitor. Now, if it does form a lower high here and breaks this trend line, this would be my target area down here where I'd be looking to add to gold. Chart 58, here's gold on the weekly. So the weekly here, we have this as a wave 1, 2, 1, 2, 3, and this is some sort of 4. This is a nested 1, 2, 1, 2. This is the correct count, guys. This could easily send gold to that $3,000 plus area that is my longer term target. Chart 59, silver. Nice consolidation from late May. Still holding that 50-day moving average. Remember, the time to buy it was back here on this breakout or that back test of the trend line. Chart 60, here's silver on the Monthly, remember this 4-year coil that we busted out of, just consolidating here a little bit. The first high there logically pulled back off supply, but longer term, I'm targeting these upper areas, and I think silver is going to eventually tackle that $50 range again. Driver 61, here's GDX. Again, lagging as I already discussed. Sorry about this, guys. My mouse battery died. Okay, sorry about that. That's the problem about a rechargeable mouse. Anyway, so GDX up today, but look at that. Well off those highs, black candle, the ratio. So that has me concerned there. Plus the stocks, we had a pretty good sell signal from the BPGDM system. Remember, it got up to overbought territory. We had a MACD divergence, gave a sell signal a couple weeks ago, and from the overbought territory. It was a great buy signal back here on March 1st. So that was an area to be jumping on new long positions on here. So I still think this area has some consolidation. All right, moving on to trade ideas. I didn't add anything new here tonight, guys, since I'm going out of town. DSL, remember I've been mentioning about this. The ex-dividend date was today, but I've been talking about it. You could have bought it yesterday. You could have bought it Monday. So if you did, congrats. You got the dividend. It's a nice monthly dividend. It pays about a 10.5% annual dividend, so it's pretty nice. Chart number 64. Sorry about this. All right, here is AMRX. This was in my Monday newsletter. It's a nice coil. Busted out yesterday. It's been a nice little trade. Chart number 65, ENVX, another trade idea from Monday. I liked the consolidation here. My initial target was here, which it was tagged yesterday. This broke out on Monday, and boom, nice follow through on expanding volume. Example of the trade ideas we put out, guys, and they do very well. Here's WETH, long idea from Monday. What spotted it was the volume. I said you could get a momentum over that high, and you got a trade yesterday, and it followed through today. Some others, here's Amazon. We've had it on the list for over a week. It's been moved out nicely out of that channel. Chart number 68, NEOG, another beauty. This was an idea for 2 weeks ago out of this nice pennant pattern. Hell of a move. In fact, it's over its 200-day moving average. Again, guys, the nice thing about our trade ideas here is that they're not day trades. Again, sometimes, you could day trade them for sure, but I put these trade ideas out with the idea that they're going to be swing trades. That means anywhere from 3 days to maybe a month. And they generally play out that way. So you could easily work a job and do some of these trade ideas, guys. And obviously the KISS systems, because a lot of those hold for, days and weeks at a time. GBTG was another one from a couple weeks ago that's done very well. Chart number 70, INCY, another one that continues moving higher. Chart number 71, Uber. Nice breakout from that pattern Steve showed last night. I'll likely be taking an Uber from the airport tomorrow. Chart number 71, Rivian. Nice little, starting to pull back today a little bit. This has been on our watch list. We'll see what this does over time. I think Rivian will survive. Fisker, as you know, is having problems. They've always had problems. But Rivian, they have a good truck. There's a lot of demand for it. I think ultimately they'll survive as a company. But remember, this thing was up in the hundreds, $150 range initially. So hopefully no one bought it there and wrote it down. Chart number 73, AVGO. It's been on the list. Nice breakout. Broadcom, AI play. Chart number 74, Boeing, pulling back here. So had that little move out of that trend line, pulling back. Now we'll see what it does. Again, Boeing's got a lot of problems, as you know. Every day it seems. Hopefully the Boeing plane I'm riding to New York doesn't catch on fire. Hope I didn't jinx myself. Chart number 75, LSPD. This is from Monday's newsletter. Still a very valid setup here. You got a little horizontal consolidation. If we can bust through here on some expanding volume, this would be my target area. And chart number 76, Pizza. Steve from last night. Nice little pattern there, moving up today. Had a nice little MACD divergence there. Looks pretty good off the lows. It's quite oversold. And PLTR, one from Steve last night, did gap up today, but struggling at this resistance. All right, guys, that'll do it. We'll see what happens tomorrow and Friday. I won't be around. Check on futures. ES futures are up about 8 points, but gold is down $23. All right. Again, have a wonderful evening. Have a good Friday and good weekend, and I'll see you guys next week. Take care.